Mr. Duquette. How are you?
I'm doing great. How are you doing today, Brett?
Daylight savings. It didn't exist because a realtor didn't tell me it existed over the weekend, but I'm kidding. I'm just ready for spring. I don't know about you.
Yeah, no, I'm there with you. We just got back from Colorado, and it was the last day was -6 with a high of 10. So yeah, I'm ready for the warm weather, like
Ooh.
really warm.
Oh, yeah. I think it's coming this week, so that'll be good. All right, so let's jump in. The biggest news of the week, Jim, is not what you're expecting. It's well, that was quick. Tom Brady unretired from the NFL. Does that really translate to industry update in real estate? Not specifically, but I will say when you love what you do and it's a part of who you are in a day-to-day part of your life, it's really hard to walk away from it. And I think those that just love the business of real estate and love what they do, it's part of who we are. It just becomes a part of the identity, right? And I think, in the context of football is Tom Brady, but I don't know, Jim. I think real estate is our football in this world. No?
No, absolutely. Absolutely. Yeah, I thought this was fun news. I think if you need a break from just everything going on right now, sports is a great place to have a break. You got March Madness, you got Tom Brady and football free agency. It's a nice time, and baseball's back.
Yeah. Well, there you go. So instead of just jumping straight to the numbers, I'm going to go to a wild and crazy thing I saw over the weekend, which was this. So I was watching the Miami Boat Show, and they're now selling NFT yachts online, and you can now own your own virtual yacht in the metaverse. And this is yachts and fun, but do we need to be taking this metaverse real estate seriously? Is this something that we're going to end up figuring out how to make money on selling virtual real estate someday?
I absolutely think so. I always say if Disney starts doing it, you have to pay attention. And Disney even said they're going to start putting together these virtual theme parks that are going to be in the metaverse. So if Disney's already saying they're going to be there, I think we need to really pay attention.
Yeah.
I said it about a month ago of, you've got Burberry and a bunch of these big luxury designers that are buying up space within the metaverse to sell their products. It's going to be big.
I'm struggling to get my head wrapped around spending a bunch of money on a yacht that's now I'm never going to actually set foot on. However, I don't know. I bought a pair of Oculus glasses just to be in the trend, in the know. And it feels pretty real when you're in there, anyway, I just thought it was interesting. We've talked before about the metaverse on here, and real estate is certainly a big part of that. And it's kind of crazy. All right, jumping on. So last week I was super excited, Jim. Inventory built up from 69 to 83 in Rockwall County, and then we sold it all this week.
Yep.
And most of Texas was in, and most of the Metroplex was in spring break last week. So I'm kind of surprised that the market went as hot as it did last week. But it just goes to show that how strong buyer demand is. And they're just buying houses, right? What do you make of that?
Yeah, it's really interesting. But as far as us just looking at the March numbers, it's really encouraging. I was looking at them last night, and if we continue on the trend with our new listings this month, we will be back to pre-COVID numbers for new listings in a single month, which is really exciting.
There you go. Well, there's Rockwall County, Kaufman County, same deal, sold out of the inventory. Dallas County actually went up a little bit, went from 596 to 614. So maybe that one's a little bit of an anomaly, but Collin County certainly went back down. in active inventory. And then Denton was slightly down. Hunt was down. Hunt's really down compared to the start of the year. The Lake had a spike in new listings and then they sold them. So Henderson County, same story, right? But at the end of the day, what is the overall conversation about the real estate market? I think it's this article in Inman News, Jim, which is hurry up or wait. The biggest question on every buyer's mind this spring. What do you make of that? How do you talk through that?
Yeah, I wish I had just the magic answer for that. I've had that conversation with another seller of mine who's also looking to buy, and there's not just it has to be their decision. So the best thing you can do is just give them all the facts and let it be their decision. But for us to try to sit here and say, yeah, next month will be a great month, May's going to be a great month, we just don't know. We don't know the next COVID or the next war or whatever the next thing is going to be in the market that's going to disrupt it.
Yeah. I mean, the power of a low interest rate is actually real money. The cash you got to pay over asking price to get into a house is real money. The cost of waiting with properties appreciating at the values they're appreciating is real money. So you got to weigh all these factors in. But I think you got to realize that if we as real estate professionals are waiting on property to show up in the MLS, we're actually losing. We're in a reactive state. And one of my favorite questions to ask people right now is, how would you sell real estate if there was no MLS? Meaning, Jim, I'm a buyer, I'm ready to go. How would you find me a house if there was no MLS? And go ahead.
I'll answer that real quick. It's the thing I really push to any agent I talk to right now. You have to circle prospect, and I hear there's not the yellow pages or whatever we used to use back before the internet, but you have the internet, you have a wealth of resources. You need to just circle prospect right now.
Yeah. And for sake of time, I'll just go quick. I mean, circle prospecting, door knocking, golden letters. I'd be mailing golden letters every week right now. Print marketing, picking up the phone, digital marketing. There's all these things that it's what we teach people to do anyway, but we're not really doing them at a high level because the market's so hot, one, and two, everybody's waiting on the inventory to solve the problem. Jim, take over. I think my car alarm's going off. Hold on a second.
Well, and I'll tell you one thing that I've been watching is our showing reports. And I think when we start talking about the buyer mindset, I think you can look at the showing reports right now and really tell the buyer's mindset. As I was tracking this all through January, February, last month, we saw a big drop just overall in basically every price point. And when you take your two biggest price points right now, that 300 to 400 and 4 to 5, you've seen a 25% drop off, and you've seen similar drop offs between 15 and 20% in the other price ranges. Our days on the market aren't necessarily going up right now, but I think that could be right around the corner as interest rates continue to go up. You have that many, you hit on earlier, we have that many people waiting in the wings, waiting for a home to be available, but eventually, and we've seen this with the new home builders, that's going to kind of take a turn as well. And it's just something to really watch. We went from 14 showings per listing to, I think right now we're sitting at like 8.
Yeah. So the velocity is slowing down, the pace is slowing down. However, what do we believe to be true? We believe the demand's going to stay hot. We believe interest rates are going to creep up. We believe that price appreciation is going to be double digits this year just because of how hot demand is. So you know these things. So you should be able to create some predictive conversation, some consultation with clients around those things, because it helps them make those decisions, right?
Yeah. Yeah. And I want to say, I think we're going to hit our double digit increases right now. March
Oh
and
yeah,
April. Yeah. March and April.
first half.
Yeah. That's what happened last year. I think it's going to be what happens this year. And we're going to start seeing a little bit of a change in narrative come June.
Perfect. Well, let's look at a couple other things. So here's your 10-year Treasury note over the last 30 days. So remember, February 24th is when the Ukrainian war started. So you saw the disruption in that Treasury note, but we're now back at the level it was pre-war, and it's going up. And what that tells me is everybody's nervous about inflation, but I still think the Fed's going to raise the rates.
Yep.
And I think the interest rates are still going to go up. And people are still going to pay them because demand is so high right now. And just be aware what's going on. And I think the opportunity of grabbing that low interest rate might have just sailed with about 2 weeks ago. And you don't want to lose a buyer because they get upset that they can't get a 3 on their interest rate and they're getting 4s. But you need to be able to consult them around a broader perspective around what that looks like. Anything you'd add there?
No, perfect.
All right. So inflation. This is inflation since 1988. Overall, you expect inflation to go up over time. You expect to see a natural trend line of a certain percent, 4%, 5%. What you don't expect is this high peak trend line that we're seeing right here. And you can see, look back over the graph over the last couple of years, you saw it in 05, and then we kind of plateaued and then came back down a little bit through that recession we went through. But at the end of the day, it's not going to stay at this pace. Yeah. It'll plateau, it'll come down. It's worthy of looking at, but it's not, I think my opinion is we're giving too much energy to this conversation than it deserves.
Yeah, it's really an unprecedented time. As I really looked at this graph the other day, when you start comparing it to oil prices and gas prices over the same period of time, this little period of time from 2020 doesn't make any sense.
Mm-mm. Mm-mm. And we talked a year ago about it being short-term or supply chain inflation, but it tends to look like this is a real inflationary period that's just causing the price of goods and services to go up. The sad news is in real estate, we spend a lot of money on gas. Like we're driving people around. The good news is there's not a lot of houses to show them. So maybe it's a catch-22. But at the end of the day, it's worthy of discussing. It's not worthy of stress at the moment. We'll just stay on it. Okay. So Gary Keller goes through the numbers that drive real estate every year in his vision speech. And those numbers are home sales, home price, or median home price, inventory, mortgage rates, and affordability. So we should study these at a local level as well. So here's what Dallas-Fort Worth looks like. And Michelle Little has put this together for me for years. And it's just a powerful representation of what our business looks like. But what I want our agents, Jim, to be able to do is to create the conversations around these. And what is the conversation of this first slide? We're selling more and more houses every year in the Metroplex. It continues to grow. What do you make of that?
No, just that. And the biggest difference is new builds can't keep up with it right now. And so you don't, and that's the problem we have right now. We have more and more people moving in. We have, if you read the newspaper, just get on to Texas A&M Real Estate Center, whatever your source is, and look at all the businesses coming into the Metroplex. It's not stopping, and those numbers are only going to increase.
Yeah.
My wife always asks me, how can we build so many apartments around the area? We just have that many people that are coming in. It is
Yeah.
tremendous growth.
And, if you look at the national statistics, there's actually some years where they sold less houses than the year before. If you look at DFW statistics, since I've been tracking these over 10 years, we've never gone backwards. We've always sold more every year, which just talks about the economy of Dallas Fort Worth being on an upward trend line, right?
Mm-hmm.
It's powerful to see. Monthly home sales. So I went back and had Michelle add January and February of 2022 because I thought it was important to look at because some people, January and February were not their best months, and some people it was their best months of all time. However, if you look at January, it was the best January on the record books for years. And some people felt that and some people didn't feel that. And the truth is it feels different because of the lack of active inventory. But it just goes to show people are selling houses, Jim.
Yeah. And I think the big one was March. I had to go back and look at, all right, so if we keep at the current rate, what could March look like? We could surpass March by 25%.
Yeah. Well, look how strong March was last year.
Right. And this could be even that much bigger.
Yeah. But I'm anticipating the first half of this year being really strong.
Yep.
I think we'll stay strong through August. I don't know what September, October, November, December looks like. So the prudent conversation is save your pennies, right? Like don't live paycheck to paycheck, plan for the future, be economically smart. However, man, I mean, it's hard to say with a straight face that there's troubling times ahead. I mean, we got a war, we got inflation going through the roof, and the real estate market's as hot as ever. How do you predict that, right?
Right. And that's the thing is, but you can't go into it blindly. And so you have to have these shift plans, and shifts don't have to be bad. It's just different. You have to do things differently. And I agree with you. One of the things I said a couple of weeks ago was I feel like we're going to see something different come in September. And I don't know what that means exactly what you were saying. I have an idea of what we could be seeing come September. And so I have a shift plan in place in case we have something different.
Well, here's the best part about that, though, Jim, is if you put the plan in place and then you exceed it, it's all gravy.
Yeah.
But if you didn't have the plan in place and something happens, you're caught. What do we call? What's the inappropriate saying? All the skinny dippers get made out when the tide goes out. You know what I mean? So at the end of the day, having money in the bank is not a bad economic principle. We teach 3 months reserves. I actually carry 6 months reserves in the office bank accounts just for the unknown, right? So it's a good economic principle. All right, moving on. So annual median price, we're up to 291 in the Metroplex. It's a big jump from last year at 255. The question is, what will 2022 bring? I think we'll certainly be in the threes. I think it could be up as much as 325 would be the annual median home price. And if you go back 10 years, a jump from 147,000 to 325,000 over a 10-year period is a big jump. That's and it just, when you bought your first house, Jim, I don't know what you paid. I know what I paid. And to buy that same house today And everybody has this same story in their mind, right? Like, I can't believe they're paying that today for that same house that I paid blankety blankety blank for. That's just the way it goes, right? That's what inflation is. That's what real estate valuation. But at the same time, that perspective, I should shift and say, man, I should have held on to that real estate. And what kind of equity would I have created in that property of holding on to it that long?
Yep.
Money in my pocket, right?
Yeah, we have that conversation all the time. What if we would have just rented that first house out?
Yep. All good. All right. Month supply, no brainer here. We all know it's like crazy low. Expecting it to stay crazy low through most of 2022. Home price appreciation. So this line, I need to edit what it says, but this is 2021 national appreciation for, so the US appreciated at 10.68 in the year 2021. So you can see Dallas Fort Worth outperformed the US at 10.68, and we were coming in just over 12% in price appreciation. On record, Jim, predict it. What's it going to be this year?
8. I don't think we're going double digits.
You're not even going double digits.
Yeah, and I'm a little skittish. Like I said, I think we're going to see all of that happen in the next couple months. And but yeah,
I'm going to say 11.
It's
I'm going to
just,
say 11.
wow.
I just think there's no inventory. It has to. And you know, the first time home buyer is the one that's losing in this whole conversation.
Yes.
And mom and dad, I've had this conversation a lot. Mom and dad in the past would usually help with a down payment. Now mom and dad are having to cash out equity in their house to give $100,000 to get their child into their first home, or mom and dad are having to co-sign to get them into their first home. So it doesn't look the same, but I still think the smart mom and dad knows to get their child into real estate because it starts them on a financial journey of building equity and wealth and net worth and all that stuff. But it certainly doesn't look the same like it used to.
Oh.
Yeah. All right. Housing affordability. This is a ratio of how much of the median income it takes to buy the medium house. Or another way to say it is, if the median income is blank, how much of the median price house can it buy? So the median income right now nationally can buy 1.5, or they use a 3-digit rating system, 1.5 homes of the median price house. In Dallas Fort Worth, we can buy 1.85 of the median price house, that 291. Remember this price here. So the median income can buy 2.91, almost double right now in Dallas Fort Worth. So that's a good thing for affordability in the Metroplex. Oh, sorry. That's a good thing for affordability. National average is a little bit lower. You can imagine in New York City, like the median income can barely even buy half of a medium price house. So we live in a good affordability market. And then the last thing, obviously, no real eye-opening things here outside of if you go back and look at this 10-year interest rate, look at all the years where the interest rate was above where we're at now. And people sold houses like it was going out of style, right? And then if you look at the 1 year, you can see it's creeping up. Mm-hmm. And we're pushing on that 4% line. I think this is going to take a turn and go back up.
Yes. Yeah, this is where I really struggled, because if it goes up to that 4.25, I mean, that changes your monthly payment by a couple $100 potentially, depending on the price range.
It's going up.
Yeah, and I think that's where I think when they talk about the rate hikes this year, you talk about a second one coming in the fall and around September. And so if you're talking about between today versus September, that the same house could cost you another $400 to $600. You know, Gary said it at family reunion. People are buying the mortgage, or people are buying the mortgage payment right now, not the home price.
Yeah.
Just because when you look at inflation and everything else, the your mortgage payment is the one thing that is not higher than it should be.
Yeah. And so it brings us back to the question, hurry up or wait?
Oh, if I'm telling everybody and I know what I know, I'm letting them know about interest rates. I'm letting them know about the showings right now, just because it's very pertinent with everything else going around in the world. I think that just kind of shows some of the buyers' timidness. Uh, Strike while the iron's hot. I think you're going to see your price movement come in the next couple months. Take
Yeah.
advantage of it.
So that $300,000 house is going to cost 30 grand if you wait 6 months.
Yeah.
Yeah. So I mean, I helped my stepdaughter buy a house in January, if that tells you how I feel about that question. I think time value of money is important. And even though it's painful to purchase right now, you'll be glad you did later. And it doesn't look conventional. It looks very power buyer, cash is king, parents co-signing, parents having to give extra cash to get into these houses. It looks like cashing out of equity. I see a lot of downsizing going on because people that build a lot of equity in their house all of a sudden take that equity and downsize in property and then pay a big chunk of it to cash and live pretty inexpensively and live a more enjoyable life in theory.
Right.
But I think the economic conversations that we're having on a weekly basis, Jim, should be a dialogue to help people go win in this market. So, Jim, I appreciate you.
Thank you, Brett.
Any last thoughts?
For today, you know what? You said this a few weeks ago. Keep making those care calls.
Yeah.
As we were coming back from Colorado, it's all I could really think about were those care calls and just how much that means right now. As we just saw, just that part of the country coming back down. I think it's a needed thing.
There you go. And it may be the best thing.
Yeah.
And then talk about Tom Brady afterwards. Have a good one.
Have a good one.
Bye.